Welcome to today's IVG Market Blast. I'm Brad Alexander, and today we'll take a look at Forex trading on pound dollar, silver, gold, the Nikkei 225, the FTSE 100, the Dow Jones Industrial Average, the NASDAQ, and the S&P 500. Just a reminder that these videos are only an observation of current market conditions, and these are not to be considered as trading advice. And don't forget to like, subscribe, and keep up to date. We saw big moves in last Friday's non-farm payrolls, but is that the end of the story? Maybe not. Let's take a look. For example, on the S&P 500, we see price action rising, but the overall trend is bearish. We will be watching this upper trend line, the overbought stochastic oscillator, along with the news on the Iran war and the economic news, see if the Fed may in fact have to raise interest rates because of inflation. Let's face it, even the Fed can no longer call the inflated price of gasoline transitory, and there's no end in sight to the Iran conflict. We are seeing a very similar picture on the NASDAQ. And the Dow Jones Industrial Average, which has seen an even steeper drop out of this descending triangle. And if we look at longer time frames like the daily charts, we see that price action has broken lower than the lower trend line on all major indices like this on the Dow Jones. And this on the NASDAQ. We have a slightly different story on the FTSE 100 out of the UK, with price action breaking through the upper trend line and trying to break resistance. On the daily chart, we see a descending triangle, so price action could go either way. And finally, on Japan's Nikkei 225, we see a clear downtrend and an overbought stochastic oscillator. We have to zoom way out on the gold daily chart to see where price action is going next and if the US dollar is going to get any stronger. We see key levels below at $4,000 and $3,900, but keep an eye on next week's interest rate decision by the Fed and the Iran war, which could definitely stoke inflation and have the US dollar go even stronger. Silver as well has reacted negatively to the US dollar strength, and price action is trying to break support in this multi-month descending triangle. GBP has been showing strength against other currencies lately, so when we get two currencies that are equally strong or equally weak, we always look for range trading opportunities. Two indicators that work well here are the Bollinger Bands and the stochastic oscillator. Also, if price action trends for a while, the 20-period moving average, which is the core of Bollinger Bands, acts as a dynamic line of support and resistance. I encourage you to check this out on as many pairs as you like and to backtest. That's all for now. CFDs and FX are leverage products, and your capital may be at risk.